Okay, I'm tired of waiting. Welcome to the closing beat. Happy Tuesday, everybody. How you doing? Didn't feel like waiting for the thing to run out there. You know, that's what happens. We're financial advisors here at Jazz Wealth. This is a quick show that we do to go over the update. What did the stock market do today? We'll cover all that kind of stuff, all kinds of geeky goodness inside of it, and then I'll take your questions. If you happen to have any questions, I'll do my best to try to answer your questions there at the end if you happen to be watching this live. Like I said, we're financial advisors. We just thought, let's make it a teaching effort, right? So instead of just kind of investing for customers and then walking away until Christmas time, let's teach them. So we built a TV studio instead of building an office, and this TV studio has Oreos. Just waxed like 10 of those things, so I'm just letting you know. If I talk a little fast today, I'm jazzed up on some Oreos. Let's talk about the stock market here. You got the Dow a little bit higher on the day. The S&P squeaked out a little bit of a gain there. The NASDAQ was down on the day. Second day of 4 days where the NASDAQ, the super duper tech stocks didn't really participate. They just didn't have anything to do with what was going on today. And the Russell, nice little rally back there, really because of one name, sort of. But the small cap value area did really well today. So that's one of the reasons you see the Russell up higher on the day there. Like I mentioned, you got the super duper cap stocks taking a little bit of a break. I'll pop over here so you can see the NASDAQ coming off the highs. Obviously very strong still. We're not discounting anything that's happened today. It's just a bit of an off day. You got Amazon. Was one of the reasons that held us back today. In fact, it's kind of interesting if you were to look at yesterday's performance. If Amazon would have done yesterday what it did today, basically this is where we would be, right? It would have been that sort of flat, choppy day in the stock market. That's how much of an impact Amazon had. Almost a half of all of yesterday's gains were because of Amazon. Very fascinating there. Anyways, moving on here, you got Dow. We'll talk about some of the major indices here if you're looking. Here's the Dow back above the 200-day, just holding up nice and tight there. It was Energy and Boeing that did all the heavy lifting. There you go. You got Boeing up 2.4% on the day. We'll cover that a little bit later. And then if you look at the energy area, you got Chevron, massive rally back above the 50-day there, right about, give or take. Up 7% on the day. Energy was where it was at today, man. If you had any energy stocks, you likely noticed that they popped, and they popped rather quickly. I do want to point out in the Dow, though, Nike, nice little bounce off the 50-day, and also in this little downtrend. There's a lot of stocks that look like this right now, where they're trying to break through a very shallow and calm pullback in some of the out-of-favor areas, right? You know, the stock market just keeps moving higher, but some of these retail areas, REITs, although they're kind of weak, obviously energy is pulled back. You've got some of these stocks starting to move outside of what's known as a little bit of a downtrend there. Now we take a look at the S&P 500, not comfortably, but we're above the 3230 area that we talked about there. Like I said yesterday, almost half the gains from Amazon were in the S&P. I mean, that's how impressive it was there. But kind of interesting there. The S&P today was mostly flat. I mean, positive, but mostly flat. If we look at like the 5-minute performance here, we take a look at where the market's open, right? You go into this area here, and then throughout the day, not much. A little chop back and forth. This looks wider than it is because it was just a real small range type day. And then at the end of the day, we saw a little bit of a sell-off. As Mitch McConnell said, hey, that stimulus thing you guys thinking you're getting by the end of next week, it's probably going to take longer than that. Stock market didn't like to see that. That essentially sets you up for a calm market into the news of a stimulus. I don't know that that's how it happens. That seemed to be the game they were playing there. Anyways, if you're looking for the stimulus, as of now, the wording is it's going to take longer than the end of next week. The Treasury Secretary was hoping that they would have that stimulus thing ready to go by the end of next week, meaning new direct payments to you, hopefully some payroll tax cuts. I'll vote for that, although they don't ask for our opinion. Anyways, that's what you have for the overall stock market there for the day. Our FinTips video, as you can see in the bottom right-hand corner of your screen, we talk about target date fund changes. Now, important to note, I wasn't talking about your brokerage accounts. I was talking about your 401k, changes coming to your 401k. good changes in a way. As far as target date funds go, Roth conversions in 2020, some considerations there you may want to look at. And then on Friday, we're going to do how the IRS actually categorizes the withdrawals that you do if you happen to take them early from your Roth IRA, generally speaking. Maybe not now because of the different rules going on right now, but just kind of the order of operation of the funds when you take them out. So that's that. Going over to the sector breakdown here, take a look at what's going on. Oh, can I just tell you real quick? On Thursday, our Wine and Wealth class for customers, we're going to do a show and tell. We're going to actually show you our new dashboard, everything that we've got coming out in terms of our clients being able to see their accounts and all the cool and geeky stuff we're working on there. Then I'm going to take my notepad and a pen, and I'm just going to stand there and take some suggestions, things that people would like to see. I think we covered a lot of them, but I'll be there Thursday to check that out. Also in our research section, I know I said quickly. So in the research section, today we did a post. We're talking about how to filter through stocks to look for on earnings if there's a lot of them to look at. So we started with a list that was over 2,100 stocks long. Yeah, that's how many stocks are reporting in the next month. And then we showed you how to filter through those and decide which ones you may want to put on an alert, watch for things that are more volatile. Maybe if you own the stocks, things you might want to look out for. If you're one of our research members, just go on over and click read post. You can check it out there. If you're not, I hope you'll check it out. jazzwealth.com. Up at the top, there's a little thing for you there. Anyways, going over to the sector breakdown. There you go. On the screen, I've disappeared. Let's talk about it. You got 7 of 11 of the sectors higher today. It was very close to being 9 of 11. You had real estate. Real estate just flat right there at the end. The sector itself couldn't get up because of the dividend there. This is higher on the day, the XLRE, but anyways, the sector was lower. Healthcare was also just a touch lower on the day. Right at the last couple minutes, it could have gone either way, but they finished negative. You had 7 of 11 sectors higher on the day. Tech took a little bit of a break. That was your worst performer on the day. Like I said, it was just a break. If you look at the big names inside of it, you got Microsoft down 1.3%. Take a look at Apple, 1.3% as well. A little bit of a pullback there. I don't know that you see anything magical out of these two stocks until earnings. Maybe you do. I'm just saying, it just seems like, all right, volume's dropping, things are looking weaker. That could be the case. Communication services, also near the bottom of the list. That was your second worst performer on the day. Some of the bigger names in there. Facebook just pulled back 1.5% down on the day. And then you got Netflix down 2.5% on the day. After their earnings, you're kind of seeing the sell into earnings kind of play out, right? Stock was higher, earnings come out, they get sold off. A lot of people think that these big stocks, your Facebook, Microsoft, well, all the other ones in the FANG plus Microsoft plus NVIDIA space, a lot of people are thinking that those stocks are going to get sold into earnings because of how they've performed leading up to it. Well, I did mention energy. That was your strongest area of the day, and that's because of oil. If you take a look at oil, it popped outside of this range, gave everybody a reason to be at least a little bit excited about the energy sector for the day. We'll see how that goes going forward there. It was by far the best performing sector of the market. XLE up 6% on the day. Every name in this sector was higher. We mentioned Chevron and ExxonMobil. That was in the Dow there as well. Both very good days for them. Man, many of the best performers in the S&P today were actually energy stocks. For example, if I were to look at the best performing stock in the S&P today, that'd be Occidental Petroleum, about 11% gain. Devon Energy, right? Apache. Well, it's the first 4 names, 5 names, 6 names, 7 names, 8 names, 9, 10, all the way. The top 10 best performers today in the S&P were energy-related stocks. You got to go all the way down to number 11, where you get Nordstrom. For some reason, was the 11th best stock there. Anyways, good sector today, very, very strong. Trouble is, it's a tough sector to be a part of. It's a tough sector to find trades in because it is so messy. It's so back and forth there. If you look at names like Occidental Petroleum, Halliburton, what do? Do you start a new position here? I mean, do you get in the mix of that? Even the one I mentioned a second ago, Apache, is that really starting to recover? Is it just going to chop around for a while? What's oil going to do? It's just a tough area to be a part of, in my opinion. Consumer staples. Also nice on the day, and because of where it closed, it now has 5%, just under 5% to get back to those highs. We're going to cover those highs here in just a second. But if you take a look inside of it, you got Philip Morris, an immediate 180 reversal from yesterday. That is known as a 180 reversal. We covered that in the dojo for our customers there. But that's because of earnings. Philip Morris reporting earnings, and they beat by 19 cents. They guided in-line revenue stronger than expected. Those are your cigarette people still out there doing their thing, mostly. Coca-Cola. 2.33%, also a 180 reversal, just a smaller day. Coca-Cola normally not too exciting on earnings, but it did get a little bit of a pop there. They reported earnings that beat by just a penny. Revenues came in as expected. Organic growth was the exciting thing to take a look at there if you happen to be looking. Hey, financials woke up a little bit today, by the way. Financials, I don't know. I mean, this is a tough one too, right? Because you don't have a very strong trending area like tech. I mean, it's exciting to see it up on the day. I don't know what you do with that. News related, you're going to see Wells Fargo up 6.6% in the financials there. They got a new CFO trying to fix their problems there. Real estate, not exciting, right? I remember yesterday I mentioned a whole lot of weak patterns in real estate. That continues today. I don't know. That one's kind of hinting at maybe breaking down. Maybe it's kind of early. You could look at any ETF for real estate that you like. Look at the ICF here. Ooh. Not looking good. Some of that looking pretty weak in there. We'll cover it as we go. Gold up 25 bucks today. We got a post in the research section about gold and what it's currently doing. But the recent breakout there continuing up 1.5% basically on the day. Okay, before we move on from the sector breakdown, in fact, I'm going to go over here to this screen and we're going to go into a different way of looking at things here. How far do we have until we get back to new highs? I just mentioned a second ago that the consumer staples sector is about 5% away from hitting new highs as of today, right? As of yesterday, it was about 6% from hitting new highs. And this is a list of every sector, how far they have to go until they do hit those highs. I covered this a while back when we were at lows just to make an exciting thing out of it. But you can see consumer discretionary and tech, they're already there. They've made new highs from the virus high, that February 19th. That's known as the virus high day. So we fell, did whatever, and then how much further do we have to get to those highs? As you can see there clearly, energy is the weakest at the bottom there. Got about 62% left to go. It's the weakest, and there's only one stock in that sector right now that is up on the year. That gives you an idea of what's going on there. It's Cabot Oil up on the year there. You can look at communication services, second worst in command. There's only 9 names in the sector that are higher year to date. Facebook, Google, Netflix, that's some of them there. Healthcare, consumer staples, and basic materials are all close, right? You can see less than double digits from hitting those highs. I'm going to hit this button here, and we'll turn that sucker off. And so that's kind of where you're at as far as that goes. We like to take things a little bit further here, so we're going to add a little bit to it. Since the start of this bull market, you know we're in a bull market, right? It's a new bull market here. So in the start of this new bull market, take a look at the returns of some of these sectors here. Consumer discretionary, 60%. It's actually, tech is not the leader, which you would think it would be. Tech up 55% since the bull market started. These are impressive runs. The S&P up 45%. Yes, I know we fell and then we had to recover some of that and everything, but holy cow, these are impressive moves. So then we thought, all right, these are rather impressive. How often does this happen? Is this something that is very normal and we're just making a big deal out of it? Let's look back to 2015 and let's just take a look at the performance and see if what's happened in really just a few months is normal and looking back over 5 years. If you look at the 5-year returns, you can very quickly see that we are growing a lot faster and at a rate that is actually not very normal. 5-year returns for technology are the only thing that seems really exciting here. 163%, man, that's impressive. But if you look at like consumer staples, 5-year returns, 21.3%. Weren't we just in a really big bull market, right? And that's what we could muster up in that sector, right? If you look down here at utilities, materials, real estate, financials, this is the last 5 years. So it lets you know that when you look back at something like this, okay, we've gone a little too far, right? That's a little bit too exciting in a really short amount of time. Just another way to look at it, so I figured I would share that with you. Hopefully you learned something from it. Going over to the technical breakdown, which we like to do, where we take a look at the different areas of the market from a technical perspective. Yesterday, we gave you a whole good list there to take a look at. Maybe we don't have to review them all again today, but you got 46 new highs today, and that's 3 days in a row that number's grown. 38, 42, and 48, or 46. Now, I'm going to call it kind of a tired list. Not that they're bad stocks, just a bit of a tired list, because if you look at things like Chipotle hit new 52-week highs, but it didn't do anything special, right? It was basically flat by the time the day was over there. If you look at things like Take-Two, it hit new highs as well, but did it blast off? Was it an exciting day that would make TV headlines and something magical happen? Nope. Alphabet, or Google, down 0.5% on the day. Hit new highs, closed well below where it opened there. So those are the sort of things you want to take a look at. CTXS, it had its excitement yesterday, made a new high. It's great that it made the new high list, but it seems a little bit tired there, and you've got a whole recipe of these stocks inside of there. Skyworks as well, 52-week highs. Not that impressive. Those are the kind of things you want to pick up on when you're looking. Now, looking through the list, there were some good ones. Packer, transportation company, looking real good. New highs there, closed near the highs of the day. Whole Logic, that breakout play that we pointed out now some weeks back right here, this little guy right there, continues to move higher. I would say this is kind of a weaker one as well. It was a good day, but I mean, it wasn't magical. I just wanted to point out a winner. A Biomed, very good, right? It was a good day, finished above where it opened. It did actually gap higher and closed higher. That's kind of impressive. So there's some names maybe you want to take a look at there. There were 0 new lows on the day again, so no 52-week lows. And to give you an idea here, if you're looking at the S&P, however you want to look at it, we're above the 50-day moving average. That's the blue line. There are 78% of the S&P 500, that's over 300 names, are above the 50-day moving average. Give you an idea of the sort of strength of the underlying the stocks in the index there. There are only 29 stocks in the S&P that have more than 5% to go until they get back above. So they're 5% or further below. In fact, there's only like 7 of them that are down double digits from the 50-day. So it lets you know that most stocks are playing along, even though tech gets all the attention. Most stocks are playing along, looking pretty good there. I'll move over to some of the stocks in the news here, which you can see at the bottom. Maybe we need to do a new little slide or something there. Anyway, stocks in the news, we've got Boeing, right? Mentioned that one a minute ago. The FAA came out and they said, we're going to issue that statement on the 737 MAX, getting that thing back in the air. Not an airworthiness directive, but an airworthiness something, a certificate or something. Pilots will check me on that. Anyways, so probably not going to be back in the air until the end of the year. Boeing a little upset. They were hoping for the end of the summer, which was the last comment I remember from them. Looks like it's going to be at the end of the year before we get back on those planes and hopefully don't crash. IBM, of course, beat on earnings. We talked about this yesterday. IBM beats by 9 cents. Revenue's better than expected. The cloud growth was good there. The problem is that earnings are declining. So although they beat, we mentioned this yesterday, earnings are dropping. Maybe I can come up with a clever way to show you guys that. Coca-Cola, that was earnings, still up 2.4% on the day. Nice day for Coca-Cola overall. I have no complaints about that one. Lockheed Martin, also on the list, back almost to the 200-day moving average there. Beat on earnings, beat on revenue. They guided higher, and they got the, what was it for? $850 million contract. I forget what it was for. So they got the C-130, and I forget what they're building. Anyway, stock a little bit higher there. Recent IPO, Albertsons, the grocery store. Very strong move off lows there, obviously really good. Today was the day where actually it was yesterday, where the analysts get to put their first thoughts, initiations, buy, sell, whatever they wanted to say there. And they got 11 different ratings out there, all basically buy ratings or the equivalent of buy ratings. And so that stock added about 0.5% on the day, still closed off of its highs there. After hours, and then I'll take your questions, you got Texas Instruments reporting earnings there. It is positive by 1%, easily beat on earnings and revenue. Remember, Texas Instruments has an average move, plus or minus, we're going to go over here actually, plus or minus 4%. And when it took off, it was up about 3%, right? So that was pretty impressive there. Well within the average historical range that you would see, looking in the research section there. I would like to say Snapchat was the other one there. Snapchat down 5.5% overall. They lost 9 cents as expected. Revenue beats, whatever, they just, still losing money there. When it reported earnings, it fell almost 12%. Remember we talked about this one. Snapchat's the most volatile name, or one of the more volatile names there on earnings, plus or minus 13%. And for a moment, it lived up to it. It's down about 5.5% at the moment there. It's only been positive on earnings day, which will be tomorrow. It's only been positive 4 times in its whole history. So what do you think the odds are that it finishes positive tomorrow? Right? Not very good. Anyways, that's that. Moving on. I talked a lot. Earnings tomorrow, Biogen, HCA, RCI, Thermo Fisher, Chipotle, oh cool, CSX Railroad, Discover, Equifax, Microsoft, Tesla, and Whirlpool. Microsoft and Tesla, of course, to be the ones that get all the attention. CVS paying out 50 cents in dividends as well if you happen to be a dividend person. I'll take a look at your questions, see what I can do, and then we'll get out of your way. Yep. Energy. Energy was the exciting area today. Yep. You want the market to pull back there? Yeah. Well, the election season is picking up. Yeah. I didn't see what they decide on the debates. Anybody know? Are they gonna do some debates there or what? Let's get this thing going. Can you expect new 52-week highs for Lockheed Martin as well? You're asking a lot, right? So it's got a ways to go. What's the time frame you're looking at there? That thing's going to have to go over 15% higher. That stock doesn't move that fast, but I guess I can cheer it on for you. I don't think you expect that because of earnings. No, that would be very odd. Yeah, I would not expect that. I like it. The Ohio Speaker of the House was arrested. Finally, something not happening in Florida. I saw that and I'm like, okay, all right. Kind of score one for Florida. We made it a day without something weird happening that I know of. So it's about time. We'll let you Ohioans have a good time with that one for a change. You want to review Roku. What do you like about it? What am I reviewing? Take a look at the stock here. There's not a whole lot going on right now. Sideways movement here. Very choppy. Obviously, it's been nice over the last couple weeks there, so you're not complaining about that. You've got a ways to go to highs there. You can already see that when it tried to make that attempt, people decided that was going to be a selling moment. So you're probably going to have to be a little patience on this one. I don't think you see this one just tear off and head back to 180, unless there's some news I don't know about. But August 5th is earnings, so you've got a little time there, a couple weeks still to go. I would believe that the whole cord cutting thing is true with what they're going to report in their earnings, that whole focus there. We recently did that in May. I haven't watched cable TV since May, and I'm having a great time. I love it. Free TV. What is it? Pluto TV. I'm just watching all kinds of stuff, man. What's up? It's good stuff. Watch like 40 hours of stand-up comedy, and then, that's your binge watching. Good stuff. You're passionate about some Nikola there, huh? Yeah, I think there's some analysts that would agree with you. $40, give or take, is where it's kind of hovered around today. Yep. I like it. Yeah, the remdesivir, by the way, was really exciting. Remember when that thing took off there, seeing that news come out? Was really exciting and then not. This is a very, very choppy stock. If you look at this stock here, how do you make heads or tails of day-to-day movement? There's a definition of some volatility right there. Christmas tree. It looks like a Christmas tree. One day green, one day red. One day green, right? You see it? Oh, that's a tough one. That's why I don't like this space. It's one of the reasons anyways. That's a tough one. Hey, thanks. You posted the debates for us. Oh, awesome. Right after I mentioned I don't have cable TV. I'm sure I could watch it somewhere. One of the candidates' sites or something. I'm sure they'll stream it. Yeah. I love it. You like Berkshire for the long term there? Why is that? You like Berkshire? One of the heavier weighted stocks in the XLF, so that's something to consider there as well. If the financials do get moving, it's likely Berkshire is going to go with it. In the midterm, last 3-4 months or so, you don't really have anything exciting to grip onto, so that's a bit of a problem for me. If you have no trend, you have no resemblance of a trend, you're essentially just guessing that this would be a good spot to hop on the train, I wouldn't do that. I'd wait for some down days and just see, look, I'm chopping around highs to lows. Let me chop back down towards those lows. And although you have to kind of grit your teeth and close your eyes, yeah, maybe that's where you take a shot. Not that I'm allowed to say that. Yeah. You can't see it. You can't see it there? Yeah. I had to do it, man. I got to get a haircut on Friday, and it's like $6 more for them to do that. And I'm like, keep my dough. Just kidding. I love it. I love it. I love it. Well, I'm going to wrap it up there because we like to go all day on these things here, keep you guys interested. So I appreciate you guys watching. If it helped you in some way, hit the subscribe button. We do appreciate that. And I'll wish you a good rest of your day. We'll be back tomorrow. Do this all over again. And see you then. Adios.